Ah, yes. Ah, yes. Ooh, the grass is green. It's not a bad song, huh? Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Hope you're having a good day. Hope all is good. All is good there. We are financial advisors here. Very unique. I'm going to share a little tip with you. Something you didn't know about me, because the personal side is good to come through as well. On my right hand, I do have 4 fingers right there. It's every time I do 4 tips of this, change the camera, 4 tips to this, 4 times to do whatever. That is genuinely true. Hey, big guy. Yeah. No, you want to hit the camera thing? There, oh, hey, there we go. So I do have 4 fingers on this hand, but a fun fact about me is when I was younger, this has been 20 years, you try to stop biting your nails, and I couldn't do it. So I said, well, I'm gonna pick a nail and I'm gonna stop biting it. It's on this hand, and I never made it past the ability to not bite one finger. I haven't bitten that fingernail in 20 years, but I've never moved on to the other ones. Woo! So I'm working on it. Everybody, we try things, you develop habits and everything like that. Hey, let's move on to the stock market, because you guys probably care a little bit more about that. That's what we talk about here. The S&P actually higher today. Not as high as we were. It was actually a pretty choppy day. Remember we talked yesterday about, hey, that's a volatile day if we were in middle of 2019. Even more volatile day actually today. But we're working our way back up to the downtrend here, which in this case is pretty much the 200-day moving average. You can see how people aren't willing to actually get right up to it. Why is that? Why would people not be willing to buy up to the 200-day moving average? It's a risk to reward thing. If you look at the charts, if you were to buy here for a reward of only here, where's your risk? You have a stop loss or potential exit point that's all the way down here. That's about 2.5 times your risk. In general, if you're going to be investing and doing this on your own or DIY trading, maybe you like doing trading, risk to reward, you have to return a multiple of your risk. If you can't do that, it's impossible to be profitable. You'd have to get every single one of them right, so that's why I say it's impossible. So that's why the market's stuck here. The risk is all of this. The reward is, well, maybe we get there, maybe we get further, but that's probably it. So it's an inverse correlation there. Nobody likes that there. Anyways, we were higher today, but because of Walmart a little bit. Then we got some PPI data that comes out. You know what PPI data is? That is, in fact, the inflation for producers. So CPI, which we had last week, is the consumer inflation, and the PPI is producer inflation. How much more are they paying for the raw goods and materials that go into the things that they make and then sell to the consumer? So that number came in better than expected, but we pretty much drifted lower all day after that. The Fed continues to say that, hey, maybe we're not going to be cutting rates as fast as you think there. Maybe we are going to be pushing a little bit harder for a little longer. And so that's what you had going on there. Retailers, like I mentioned, because of things like Walmart, Home Depot, and all kinds of names coming out, retailers are the focus, and everybody's looking at inventory levels, right? It's a good measure of inflation, and we got a good start here today with Walmart. We'll cover that in just a little bit. In short, this earnings, the last part of earnings season here, it's all retailers, right? So that's all that reports. And in other words, if they report higher inventory, expect a lower price, lower stock price. If they report declining or low inventory, expect a higher stock price, right? So that's a pretty simple way to look at that. Okay, let's go back on over to the charts here. So what's going on? Yeah, it's a little slow today. So we look at the Russell 2000. That and the NASDAQ duked it out for first place here today, but the Russell took first place. In fact, gaining the most out of all the indices there. Where's all the money going? Remember yesterday we were talking about this here. Oh, the small cap stocks are getting the most love. Large cap stocks are still bouncing too, but all the action is over here in the small cap stocks. Well, that becomes true again today. Well, we had a good day across the board for all the indices, but who got the better end of the stick? Who outperformed everything? And that's going to be your small cap there. So kind of interesting. I'll look at the NASDAQ here with you. That came in second place for the day. It's still easily in last place year to date there. And I'll point out the strength today was in the semiconductors. Right? And Chinese stocks as well. But we'll just pull up the SMH here to take a look. Boy, it just continues this impressive rally, breaking the downtrend as we talked about yesterday. Well, it's all continuing here today. The stocks that have been pushing it higher, remember, I'm not trying to reuse old information here, but remember we showed this where it's not one stock. Today, okay, a little bit more one stock because of the Taiwan semiconductor thing with Buffett we'll talk about in a second. But otherwise, what got us to this point has actually been a lot of the semiconductors as a whole. So really strong there and continuing to be strong, however, overbought, right? So something to consider. Little excitement over here. Really, any China stock had a good day. They're doing a thing over there, by the way. They do it a little bit differently. When we say stimulus here in the U.S. economy, we basically just whip up a bunch of money and throw it out there in the economy. Right or wrong, that's what we do. In China, they have already allocated the monies that they're going to spend year after year. These are very long-term people. They're the kings at doing that. And so all they're really doing when they say stimulus is they're going out to a further year that money's already been allocated, in this case, 2024, I believe, and they're just pulling it forward to this year to solve this year's problems. They are not, this is a dangerous word, they're not creating new money. I mean, ultimately they are, but they're not doing it in the year. So it's a fun balance sheet game, yeah, that they're playing there. Well, nonetheless, that helped a lot of Chinese stocks. There's like 25% rallies across the board in the mainland shares. The Hang Seng is incredible, actually, just all over there, just incredible. So good stuff there. That helps some of our stocks over here. JD.com, Pinduoduo, Alibaba, of course. I know some of you are playing with your Alibaba there. That's trying. It's trying to do something for you. Baidu and the like there. So pretty cool. What else do we have? Yeah, that's all I got for that. Look, bonds were strong again here today. There we go. So bonds up about 1% there. Held its own. It's trying to simulate a little bit of a bottom here. Can't argue with that. It definitely is doing that there. The 10 years around 3.78% or so, give or take a little bit there. It seems happy under 4%. Prices being down here means yields over 4%. So the more we move away from that, the lower the 10-year yield, the lower your mortgage rate, the lower your savings rate and all that savings interest rate. And so that's what's going on there. I want to talk about something here real quick. A little bit of a lesson, right? And I'm just trying different lessons. You can tell me this lesson sucks, this lesson is offbeat. Huh? Get the joke there. You can certainly say that, but I often talk about treating your personal finances like public corporations. And I get a little slack for that because people go, they're corrupt, you know, whatever. No, they can't be corrupt or they'd be gone, right? They'd be exposed. But they do play games. And one of the games that they play, this is literally a conversation that the C-suite level executives talk about. They know this. They're taught this. This is part of their training. They would like to know, and they do know, how do investors reward their stock in different economic cycles? And I've talked about this a little bit with you here. So in general, people reward stocks that are paying dividends and or doing buybacks. So the majority of the time that wins. So you see all these companies like Walmart today, we're going to do a $20 billion buyback. They know that that gets rewarded. So in the blue here, we shared this before, different areas where different types of returns are rewarded. So returning cash to shareholders in dark blue there, that's dividends and buybacks. During this period, that was rewarded more so than if a company spent money to grow, spent money on research, development, and growth, or if they held on to their cash, right? Looking over here, there's a brief period where growing, expanding, spending money and growing actually outpaced the dividends and buybacks. But then we're right back to the same thing where they're getting rewarded for doing that, right? Now, there we go, are currently right here. This is the economic cycle. So you have your trough, you rise up into your peak, right? What do they call it? Peak, like greedery or whatever it is, right? So you're really excited. We saw that already. And we're starting to slow back down to get back into maybe a potential recession. Made just a really simple thing to think about. This is actually the simplest way to say it, right? So the performance of stocks based on the company's use of their capital. During a rebound, which we're not in, that would be right up in here, right? Rebounding from weakness. We do not get rewarded by using or having a strong balance sheet, right? By keeping our cash and making sure that we're nice and liquid, right? During an expansion, all of this up in here, right? We do not get rewarded for having a strong balance sheet. Who cares? The world's expanding. You should be growing, right? Not rewarded. In a slowdown and recession, right in here, we get rewarded for treating our dollars like they're gold, man. We want to be very careful. We want to manage our expenses. We may want to put some money in pure savings. We want to put it in some bonds and actually risk some of it to inflation and such, right? So here's the breakdown. Now, we talked about returning cash to shareholders. In a rebound, when the market's rebounding, people want you to invest, right? Down here, check. So this is like the cheat sheet for companies if you're a C-suite guy. Are we in a rebound? Yeah. Okay, we need to grow. We need to go buy some companies. We need to go do some stuff here. Are we in an expansion? Keep growing. Full speed, pedal to the metal. Are we slowing down? Stop growing. Right? Hold up on the cash, shore up your balance sheet, maybe give some cash back to shareholders and buy back our stock because maybe it's cheaper there, right? Are we in a recession? Ooh, no growth. Balance sheet. I point this out, and I'll show you a chart here in just a second because this is not just a guess. This is actually how the markets perform. Because you could do the same thing, right? Ask yourself, what cycle are we in? Are we slowing down? Okay, I need to return cash to my shareholders. Who's your shareholders? That's you. You, your spouse, maybe you're single, I don't know. You return how do you return cash to yourself? Put it on a sideline, right? Invest it in something to outpace inflation, right? Maybe buy back some of your shares, right? In that case, you would be buying out of things that cost you a lot of money. If you're in a recession, we want a strong balance sheet, right? We would like to have it leading up to a recession. How do you do that? You cut back your expenses, right? You get what I'm saying, right? They're doing the same exact thing, but the difference is they're publicly telling you what they're doing. What's Amazon doing right now? What's Disney doing right now? What did Microsoft do the other day? Granted, this is all tech. What did Facebook do the other day, right? You haven't seen this bleed into other categories and sectors of the market, but think like that, right? Just try something like that, a little bit different there. You could do the same with your dough. Now, what do companies do? And I know I'm a little off topic here, but what do companies do when times are really tough? Like coming out of that recession, man. Here's a very simple chart. The gray area, this is a recession, right? .com bust. This is the recession from the financial collapse there. Were companies investing more to grow, or were they putting money on the sidelines? Look, you can see in every recession, they take that opportunity with the strong balance sheet. Remember, going into a recession, strong balance sheet, hold back, stop it, quit spending money if you can. Now that we're in, or presumably going into a recession, now you add assets, now you add growth, you add income, you try to build the wealth or build things that can build your wealth on the next expansion, right? They're no dummies. They have to do this, otherwise you don't invest in them. Every financial advisor talks about the same crap. It's kind of boring. That's why I always try to share something different with you. Think about it that way. Ask yourself, where in the world are we at in a cycle here? We're at that point where you should be shoring up your balance sheet a little bit, maybe starting to cut back on expenses a little bit, right? We're getting there. You want to make sure you have cash, liquid, available, because during a recession, what happens? People can't afford that Range Rover anymore. I always joke that when we go through a nasty recession, okay, then I'll be like every other advisor. I'll buy the Range Rover from the advisor that can't afford it, right? I would never buy that, but you get what I'm saying. Now you can buy property. Now you can add assets, collectibles, extra things that will grow in value, and you'll be able to sell during the next expansion. Anyways, moving on, stocks in the news. That was brief. That was hopefully something different. Little more on a personal finance side, but relating to public companies because they will tell you what they're doing ahead of time. And so just like Walmart here, they're buying back $20 billion in shares. Well, was their earnings report great? No. Was there anything special about their inventory levels? Not really. No, it's starting to get under control a little bit, but no, nothing special. Why is the stock higher? Because they're buying back shares. What cycle are we in or what point of the cycle are we in right now? What gets rewarded and they know they have to say? Returning cash to shareholders. I know now. See, I just have to reference this. If I'm a CEO, we're going to have earnings. What do we need to say? Well, we're in a slowdown. We could improve our balance sheet or return cash. Well, let's do that one. Let's spend $20 billion and return cash to shareholders. That's the moral of today's story. Reference the chart, right? So if someone on the board was like, dude, I think we should invest for growth right now. Somebody would be like, Johnny, reference the sheet. Does the sheet say that it's time to do that? No, it doesn't. Okay, so then, Johnny, what should we do? We should buy back shares. Good job, Johnny, right? So that's where you're at. And that's just a real life example of what they're actually doing right now, right? All right. Oh, one other thing. Did you catch it? Who caught it? Who caught it? Come on. You guys are smart. What did Walmart say today? I watch everything, so I caught it. But did you see how much money that the Forex conversions cost them? Did anybody catch that number? I was dying to look at that. I lost sleep over that. I woke up in the middle of the night waiting for them to come out with this. Why? Look at the dollar. The dollar is down. And when the dollar falls, as much as we talked about yesterday, does it tend to bounce and recover and go back to all-time highs? Nope, it doesn't. The strength in the dollar cost Walmart $1.5 billion. If the dollar stays weak, do you think it would cost them less next quarter? It definitely would. Did they say it would cost them less? They said, no. We expect that it will still cost us that much money. Therefore, if the dollar is weaker, we get to next quarter, that's going to be a surprise, right? Can you imagine that? Lessons learned live and in real time. And I love that I don't have to share my opinion with you guys. Like, you just talk facts there and then let you guys do what you want with it because it's teach a man to fish kind of thing, right? Okay, Home Depot. Not really exciting for Home Depot. I didn't spend a lot of time looking at this one here. The earnings were better than expected. Inventory was the issue for them, why you're not seeing this excitement here. It was 12% higher than expected. I said, okay, well, that's not really going to do much today, and I moved on. Taiwan Semiconductors, who likes a discount? Warren Buffett. Right? Warren Buffett likes a discount, apparently. Bought 60 million shares in Taiwan Semiconductors. It's the largest semiconductor in the space. It's the first one that happened to say, we are seeing a return to growth, lower inventories, and the ability to actually produce for the demand that's out there. So Warren Buffett apparently read the same thing that we talked about, and he said, yeah, 60 million shares. That should do. Money, right? The money, man. I don't follow the fancy stuff here, but Estee Lauder is going to buy Tom Ford, $2.8 billion. I don't know a lot about Tom Ford, but I put that in there. And a quick lesson here for you today, something I'm trying to think of a segment, something to call this, like the off the Wall Street commentary, the lesson that you won't see in the headlines, the deeper review, deep dive, looking into things that other people aren't or whatever. Advanced Auto Parts. Do you know them? You've probably passed like 10 of them on the way to work. They're everywhere. Advanced Auto Parts has two different categories. This is real simple, real short. They have a segment called DIY, do it yourself, right? And then they have DIFM, do it for me. Like Pep Boys, right? You go in, you buy the part, and then you go, hey, well, you guys want to change that out for me while you're here? That's the difference, right? DIY and do it for me. Their DIY segment is getting weaker, and they picked up on that. So, ooh, people aren't buying their car wash stuff here. They're not buying their stuff and then taking it and going home and doing it. It's getting harder to fix their cars. So they're focusing more now on their do-it-for-me category, and they're doing this by basically branding their own parts. You know, like Home Depot has HDX parts. Well, now you're going to have advanced auto parts, alternators. They already do, but you're going to have more of that. They're spending money on that. They're also, the interesting part is, they're going to drop, and they already have, dropped the sales on the products that they compete on price with O'Reilly and AutoZone. They're not even going to bother. They're just going to get rid of those products so that the things that they sell will what? Have a higher margin. They're not going to discount those. Things that they sell a lot of, they're going to leave those, get rid of the crap that they have to compete with AutoZone and O'Reilly in an attempt to raise their margins there. That could push them to double-digit earning growth, which currently is not being factored in to the individual stock. We're factoring in 6% earnings growth, but they just dropped that little nugget on you to say, we're going to try to change a few things. Those are short-term fixes to boost their earnings when they come out. So we'll see if that turns out to be true. Yeah. Okay, I rambled. I rambled a lot. Sorry about that. I will take a chance here and try to answer your questions. I do have to get the questions out there. Are you taking notes? Fascinating. I don't think I've ever seen Cody click a pen and take notes. Oh, he's got tons of notes. Okay. Jesus. Okay. Very nice. All right. Questions. What do we got here? What do we got here? Good lessons I'm glad you liked the lessons there. A little bit different. New car dealers are reporting growing inventories. Days of inventory are increasing. So, Paul, that's an interesting one. Here on my way to and from work, all the car dealerships are like on the main drag there. And there is a lot of cars out there compared to what it was. That may seem like a lot, you know, when you're used to, you know, quiet and all of a sudden there's a little noise, you think it's really noisy. So it could be that, but I do agree with the supply on the lot sort of thing, right? Used car prices are coming down, but right now they're coming down quickly in the wholesale market. So that takes a minute to translate into the retail market, but they will be. Well, Carvana, I mean, look at them. It's a great example there. Lots of cars that they overpaid for. Now they're just trying to get rid of them. So anyways. Yeah. It's all theater. It's all theater, but it's kind of like a language. You know what I mean? It's like theater in a different language. There's little things that you could pick up on, which they're not being coy or somehow trying to sneak something out to you. They're just telling you, but if you put the pieces together and kind of look at that language, it's like, huh, look at that. They're expecting X, but I can already see that it's going to be slightly better. Well, part of the examples there. When do you think dealership will stop pushing COVID fees on cars? I didn't even know that was a thing. I would not buy a car from somebody with a COVID fee, if that's a thing. What do you think of the dollar weakness? We covered it. We covered it, man. We've been talking about it every day, talked about it today. We talked about the stats yesterday on how often the dollar falls that much, which wasn't often. It was only 4 other times. Falls that much and how often it stays down there. What's the thoughts on FTX? It's fascinating, but I have nothing to do with anything crypto, Bitcoin, wallets, cold wallets, all the crap that is fake in real life. I've never had anything to do with it. So much so, I must have made my point at some point because people don't even ask me about it. Clients don't ask me about nothing. So they must get that I was never interested in that. I don't know. How important is it keeping up with the current events when it comes to investing? Are there any sectors that are more susceptible to the news? Biotech. Yeah, 100%. Biotech is the most susceptible to general news because news that comes out about them tends to be a clinical trial, results of a clinical trial, FDA approval, disapproval, amendments, things like that. So I stay away from that because I can't keep up. That's a thing there. In short, though, a lot of people, as they're starting, if they like to get involved, they will pick a sector and just pick a few stocks out of that sector, and they'll go, all right, after a while, I understand that stock. I get how they report. Netflix is an easy one, right? So it's an easy one to understand fundamentally. It's not the cheapest to participate in, but things like that. And then you can expand and go, well, who's their competitors? All right, well, Disney's a competitor, and that throws in the extra wrench of, well, they have parks, they have experiences, they have physical products, they have content, they have cinema, right? Cruise ships. So you could expand from there. Do you believe in a pullback soon? On what? On what? What are we looking for a pullback on? Semiconductors? I would say yes on semiconductors. But yeah. Anyways, interesting. Hopefully you found interesting lessons today, a little bit different lessons. I will continue to do things like that, just things that come to my weird little brain of mine. And we'll keep sharing that with you guys as we go. I will wish you guys a good rest of your day. Thanks for hanging out with us. And yes, we will be back tomorrow. Adios.